This is a lecture from OpenTuition.
We're going to be looking at a question in the ACCA AAA SPECIMEM exam. Before you listen to the debrief, it's important that you spend half an hour looking at the question. You'll find a PDF of the question on the OpenTuition website alongside this recording. That's particularly relevant if you're watching this perhaps on YouTube. The question in that SPECIMEM exam is called MYRON. It was set as question 3. So make sure you've spent some time having a good look at the question first. This question, which is a sort of completion question, is broken down into a lot of requirements, which makes our life a lot easier. So initially, requirement A was about the sale of a division, had 3 requirements: matters to consider and actions and implications for the audit report. Requirement B was about a chairman's report, and again this is broken apart: responsibilities for the chairman's report and matters arising from this specific report. And then the second lot of 5 marks, implications for the completion of the audit and implications for the audit report. 20 technical marks, 1 mark per decent point. Professional skills given in this question for analysis and evaluation, and professional skepticism and judgment. How do we get those marks? Well, I'll try and highlight this as we go through, but when you look at the marking guide, I'm paraphrasing it a little bit. Linking the scenario to points of knowledge will get us analysis and evaluation. Evaluation is all about being balanced. So evaluation also means reaching a sensible audit opinion after you've had a balanced consideration of the scenario. AAA candidates have a long history of not getting off the fence in audit report questions. Clearly, if you don't get off the fence and make a decision, you can't get those marks there. Professional skepticism and judgment, challenging what you see in the scenario. Can I stress, please, it doesn't mean writing the words, "we must be professionally skeptical" every 3 sentences. That won't get anything. It's not that you write the words, it's that you do actually challenge the information, suggest why it might be wrong, using judgment to suggest actions. So we're conscious we must link the scenario to points of knowledge, challenge things that don't make sense, use our judgment to suggest things that are sensible actions, and reach a sensible audit opinion. As always, some of you would say, well, I would be doing that anyway. Well, good for you. But if you weren't going to do it anyway, we know what they're looking for. So we'll look through this requirement by requirement. If you've studied a lot of past questions, you might remember questions called matters and evidence. In fact, this one is matters and actions. But I wonder if you've looked at questions, you may have seen brainstorms for matters and evidence in the past. This is what I think a lot of people think of with matters and evidence. These blue words here, a mnemonic called MARE. Materiality, accounting standards, audit risk, and evidence. Now, we don't need evidence in this one. We need actions. What's the difference? Evidence is where you write the thing. So if you're investigating a murder or something, the weapon. Whereas with actions, remember, you're saying what you do to the thing, like inspect the weapons for fingerprints. So either way, that's my brainstorm. If you're not doing a brainstorm first, it's going to be bad news. You've got to do that for any question where there's application. So materiality, standards, risk and evidence. Except we don't want evidence, we want actions. But that's easy to adapt. Materiality will automatically get you analysis and evaluation credit. Very easy when we talk about this division that's going to be discontinued or sold. You can look at the numbers and say it's 15% of company revenue or assets or profit or whatever. No problem with doing that. In this type of question, again, compare the revenue of the division with the total revenue and just come up with a number. Accounting. In terms of the accounting, we all got the feeling that this is a question about discontinuance and held for sale. And there are three things you need to do. Define, explain the accounting, and then apply to the scenario. By doing that, you're picking up your analysis and evaluation marks. If you can't define discontinuance, if you can't define held for sale, well, you have to. So, in theory, you should have sat the Strategic Business Reporting exam. If you haven't, don't panic. Go to the OpenTuition website. There are 100 flashcards with all these definitions, and work through them, please, 100 times for 100 days, and make sure you get them all right, and then you won't have a problem with the accounting. So you have to learn them. If not, well, that's what auditors do, isn't it? They confirm the accounting standard has been properly applied. The only thing they're not interested in is the standard number. I've just put that for reference in case you need to look something up. So discontinuance, significant part of the business which is held for sale. Held for sale, sale probable within 1 year because they find a buyer and so on. Accounting for discontinuance, separate presentation in the P&L. Accounting for held for sale, current asset in the balance sheet or SOFP, at the lower of the carrying amount, and fair value less cost of disposal. Then apply that to the scenario, and I think they have it in at the wrong value at the moment. There's a difference of $1 million between what the value that they're using and the fair value less cost of disposal. So explain your accounting, then you can link it into risk. Risk number 1, non-disclosure of discontinued operation in the P&L. Number 2, risk of non-disclosure of held for sale asset in the balance sheet. Risk 3, overstatement of assets and profit by $1 million because the assets should be at fair value less cost of disposal. Finally, it is material. We can see it's about 10 or 11% of profit before tax. And as soon as you do that, of course, you're once again then getting even more analysis and evaluation credit. Now into actions. The actions, if they are sensible, professional skepticism and judgment, it's mainly on the judgment side here. So what do? Well, we ask them to adjust, then I think what I've typed is probably slightly different from the model answer, but valid. It's very significant, isn't it? So, listed company, this would be discussed with those charged with governance. And a good point, again, often, is that where you have errors, corrected or uncorrected, they must be recorded on the summary of audit misstatements. ISA 450. Don't worry about the ISA number, but are often relevant in these questions at the end of the audit process. Finally, what's the implication for the audit report? So we've done the matters, we've done the actions, now finally the audit report. Well, I suggest when you talk about audit reports, you talk about the opinion and then talk about anything extra that would be in the report. So when I write up my audit report, I'd be using 5 very short sentences. Did I just say 5? Yes, 5 very short sentences. Explain the problem, first in a sentence, short sentence. Secondly, think about the size. It's 11%, so it's material. Thirdly, the only reasons for modification of the opinion are financial statements materially misstated, which is relevant here, or unable to obtain sufficient appropriate evidence, not relevant here. Finally, conclusion. Conclusion is, it's a qualified opinion. See those 4 sentences? Problem, size, modification, opinion. Will that work in every audit question? Yes, it will. Then stand back and say, are there any other things that I could say that would get credit? Whenever you have a modified opinion, you could always mention that in the basis paragraph, they will then explain the problem. So that's an easy way to get credit. Now, for the last 7-8 years, and this is being recorded in 2022, there's been a very strange tendency for candidates to talk about something called an emphasis of matter paragraph. And I don't know where they get it from, but please, no. So, when are they used? Almost never. But they're supposed to be used to highlight something that's been correctly dealt with in the accounts. So, perhaps a big legal case that doesn't quite affect going concern, but is still very big. So, no, please don't mention that. Or I'd have thought your analysis and evaluation mark, you'll just have thrown it away, I'd have thought. So just stay well away from that, please. Emphasis of matter paragraphs are disgusting. Now the second requirement. The second requirement was about the chairman's report, and the first 5 marks were what's our responsibility and what matters arise from the chairman's statement. It's interesting, when I look through the whole specimen exam, the first couple of marks of requirement B1 are the only place out of the whole marks where you can actually dump knowledge. So this is one thing where if you're the sort of person who only writes down the knowledge but doesn't apply it, these are probably the only 2 marks that you would get. So you'd end up with 2 out of 80 or whatever, because you don't have to apply this, you simply dump your knowledge. It's the only place in the whole exam when this happened. as you know, and don't forget we've got AAA flashcards on the OpenTuition website you can use as well. But ISA 720, that has all the knowledge in, says you should read the information, identify inconsistencies with the accounts and knowledge of the business, but not express an opinion. 2 very easy marks, no need to apply anything. Second requirement though there, what matters arise. Now we're back to knowledge and apply. So now we're back to applying the scenario. So lots of analysis and evaluation. Well, lots of things you can comment on. They told you about the chairman's view on revenue growth and profit growth. We know that one division is being sold, so you need to look at the statistics without that division. A little bit of calculation, nothing rocket science, using the numbers in the question. Revenue growth excluding that division is only 2%. Profit growth 5%. Clearly, that's inconsistent with knowledge of the business. By doing the calculation, it's enhancing your analysis and evaluation. Then professional skepticism is saying it's not consistent with my knowledge of the business. Where it's a listed company, I suppose it wouldn't be consistent with the segmental reporting note in the accounts either. There's a point in the scenario about the printed products on recycled paper. The audit file suggests that some of them are not, so it's similar point, again, professional skepticism. And then you really sit there with your mouth open where the chairman has put this thing saying the auditors agree that the results are strong. I think if you were the audit partner, you would have your head in your hands and say, I just don't know what to do about this. You're just speechless, aren't you? But clearly, it's not what we do. We've got to get them to remove that from the chairman's statement. The final requirement, the final 5 marks, then asked us to think about how the end of the audit is affected and the audit report. At this stage, what do we mean by implications for completion of the audit? Well, I think it means what do we do now? And I guess all we can do now is ask them to sort this problem out. So my answer would have probably been restricted. I'm sure there are other points in the model answer, but I'd say request that they change the chairman's report. Remember, a great phrase is discuss with those charged with governance. When you got into trouble at school and you were naughty, eventually the teacher said, I'm going to speak to your parents. Those charged with governance is the same. So you say to management, I'm going to speak to your parents. Those charged with governance. I mean, it's in the ISA, but it's also a common sense good point to make. Now, if there's no adjustment, well, it's probably fine to say at this stage, these points here in A and B. I've got to say this though, be careful because it does show a lack of integrity. So we must, view whatever they say, representations with increased skepticism. It's good to say here, and it's relevant here. Sometimes when I mark though, the students seem to type this virtually every other sentence. So it's good to say once or possibly twice in the exam, but not in every sentence. Personally, I think if they won't change this sentence about the auditors think the results are strong, we can't possibly sign off. so we might have to walk away. I'm normally very reluctant about resignation. But obvious point is, think about the impact on the audit report. Finally, the audit report. Do you see I've used the same format as before, just to get me going? Sort out the opinion, then sort out other paragraphs. Now, you probably don't need 4 sentences for the opinion, because you're just saying that in respect of this issue, the opinion is unmodified. I appreciate it may well be modified for the other issue we talked about earlier, but the chairman's report will not modify the opinion on the financial statements, but the problem will be dealt with in the other information paragraph. Again, I have occasionally seen students referring to something called an other matters paragraph. So once again, I'm not quite sure where they've got it from, but no. It's called other information. It's called other information and has been for some time now. So the matter will be referred to there. That'll explain the problem. Can't get rid of those crosses now. Go away. There we go. And as we've already said, the opinion on the accounts, not modified. So let's just look back for a moment. Professional skills, analysis and evaluation, linking the scenario and the knowledge, plus sensible audit opinion. Professional skepticism, challenging the information, using judgment to get up with sensible actions. When you're typing in the exam, don't say, I wonder if this is PSJ or AE. Who cares? It doesn't matter. But just be conscious that's what they're looking for. Breakdown of requirements, though. We had 7, didn't we? 7 requirements really there. Matters to consider. Materiality, accounting risk, actions, audit report. And then the second part, again, broken into those 4 sections. Thank you and happy studying.